All right, we are going to tap into the market update. We're almost halfway through the year and really the full-on busiest time of the real estate year for our area starts right after Easter. We get a bump after Mardi Gras. It kicks in full force after Easter. So now's a good time to take a pulse as we're approaching that halftime for 2024, believe it or not. First, I want to say thank you for tuning in. And if there's any other statistics, data, videos that you as the viewer want to see for us to do, let us know. We're happy to do it. These videos are fun and giving y'all information that is useful to you. You can make informed real estate decisions or just know more about real estate value. We're happy to perform that for you. So just let us know. We're happy to help. And without much further ado, here's what's going on in the 4 biggest parishes in our area. Now, we as a team at the Tepper Group, we serve other parishes in this, East Baton Rouge, St. John, and St. Bernard and others. But these are the 4 main parishes where there's the most activity for our metro area. One other thing I'm going to preface for this video is there's some underlying national information that I think is important. Because if you get on YouTube or even some of the news sites, you can get a lot of bad information, as we all know, what you're watching. However, a couple of things from our Goldman Sachs partner at Place, things like a couple of main ideas. Foreclosures, there's no foreclosure wave coming. So I've mentioned this in previous recordings, there's no foreclosure wave coming. Actually, foreclosures remain at almost record lows. People have high credit scores. Part of that is because a lot of owners still have a large amount of equity in their homes. And it was interesting, a stat that Goldman provided to us, this is unbelievable. Nearly 40% of all homes don't have a mortgage at all, meaning the owner owns it outright free and clear, which is amazing. So they have a large amount of equity. And then 28% of the outstanding mortgages, so if you do have a mortgage, 28% of those mortgages, those homeowners own at least 60% of the equity. Also saying that 28% of mortgages have a low balance. So homeowners, if they ever get into a bind or they need money or they're behind on their monthly payment from the mortgage company, they can always sell and still make profit from the house. So that's why we're not going to see a foreclosure wave. And that's why if people get into a bind because of inflation, things like that, they can borrow against their house as needed. Honestly recommended if you're in that position. But we have helped people who have gotten behind on their note and they've been able to sell it. We've closed one recently. We've got another one that's pending. So these are situations that are real life situations. And yeah, people can walk away with profit still. So keep that in mind as we're looking at this data. Our area is going to be different than the Mississippi Gulf Coast, which is going to be different than Baton Rouge, different than Atlanta, different than Houston. This is the New Orleans area, which has its own sets of pros and cons. So digging in, as you see my screen, you can see the different parishes. St. Tammany is blue, Jefferson's orange, Tangi's red, Orleans is green. And you can just see these trend graphs. We're going to look at some data points, but really here on the right side, you can see the year-to-year difference. So these changes in percentages, plus or minus, represent a comparison to May 2023. Now, if we look back in May 2023, it wasn't a banner year. In fact, we were hitting like the low. So this is a comparison to an already poor market a year ago. So just keep that in mind. So digging into this for our area, closed sales, looking at St. Tammany, Jefferson, Tangi, and Orleans compared to May 2023. In St. Tammany, sales are down. Total closed sales are down for St. Tammany Parish by 13.4%. Jefferson's down too by 10. And look, Tangipahoa is up by 14%. And that's an interesting stat. So Tangi's up. They have lower volume because it's smaller parish. However, homeowners insurance in Tangipahoa is less. Your property taxes are less. Your home prices are less. So it makes sense when affordability nationwide is still at an all-time low, people are going to gravitate to the areas where they can get more for their money and not pay rent. That's why you see Tangi on the plus side. Orleans is low. Orleans has more sales. Well, what's driving that? Because Orleans has so many properties and prices have been affected. Prices have come down. Cost of insurance has gone up. So a lot of investors are now buying up property in Orleans. We've sold some of those. Some of them need work, et cetera, et cetera. But you've seen prices adjust in Orleans Parish. So that's closed sales, all right? Mixed bag of info. Days on market, and that's all over the place. But days on market, across the board, St. Tammany up 40%. In other words, it takes 40% longer to sell a home in St. Tammany than it did May 2023. Just look at the blue line here. May this year is 21 days till you get a pending contract. Last year, if you look back, it was only 15 days. So 21 days still isn't a long time, but it's interesting to see it as a percentage. That's a 40% difference. Jefferson Parish, 27% more. Tangipahoa, again, it's shorter to sell a home than it was a year ago. Tangipahoa is 25 days. Last year, it was 29 days. And Orleans Parish is exactly as it was. No change year to year. All right, next info stat, months supply. This is interesting. Everybody is up. In other words, there's more homes for sale. That's because there's fewer buyers. Even with some great incentives from lenders for 1-year buy downs, for no refinance fees, and other great programs that are out there, more buyers are just not able to afford a home, or they can't get what they want, so they decide to wait. And in fact, looking at more of that Goldman data I was looking at before I dove into here, there's a lot of your 18 to 35-year-olds are still waiting to form their own households. They are living with parents because of affordability issues. So you have this large adult population that is eventually, a lot of them are going to move out of their parents' house and start buying homes. And that's a great thing for the real estate industry. When that happens, it's when affordability is higher. In other words, people can actually afford a home, starting their own families, getting out into their own lives more. So just interesting to note, month supply is up across the board. What does that do to home prices? That pushes them down. You can't really change insurance. You can't really change the insurance rates long term. So what happens? Pricing pushes it down because you're sitting on the market longer and people still want to sell their home. So you can see those changes across the board. 45% more inventory in St. Tammany, 30% more inventory in Jefferson, 32% in Tangi, and 29% in Orleans. Months supply. Price per square foot, interestingly to note, is actually up. Month supply is up and prices are coming down. Why is this up? Great question. This is an average. This is going to be based, in my understanding, that it's also what's for sale. So people still want a high price for their homes. Sometimes people are still living in 2021 when things were moving and prices kept going up. That's not the case here in this current market. So you can see how prices per square foot have gone up. Not a lot, but some, and then actually in Orleans they came down. And that's in part because of all the inventory that was in Orleans. Lastly, showings per listing. I love this statistic because it's an indication of the amount of activity, and it just kind of shows how every showing is precious. And as a seller, if you're in the seller boat, you don't want to turn a showing down if you can help it. Bottom line, showings per listing are down 28% in St. Tammany, 22% in Jefferson, 18%. Even though sales are up, there's fewer showings. In other words, there's fewer buyers because of lack of affordability. So as a seller, you want to make sure your home is staged. You want to make sure that it's priced right, because you're not gonna get maybe a second or third chance to get that offer. You may get one offer because there's just fewer buyers out there. As a buyer, okay, there's fewer of you out there. So depending on the home, if it's been sitting for a while, you can negotiate a good price. But for those that are really good homes that look good, smell good, price right, y'all are going to be in competition with each other because there's not going to be a ton of those homes that are hitting the market. So keep that in mind. Have your pre-approval. Be pre-approved. Don't be pre-qualified. Be pre-approved. Have your finances in order. Know what loan programs you're doing. Make a good offer. If the home's been sitting for a while, you've got more leeway. Obviously, people aren't beating down the door for it, so you can get a scoop on good buy like that. But if it's new and fresh and just hitting the market, you're gonna have to pay for that house, and that's in part why you see that price per square foot going up a little bit a couple of slides ago. And then you can see Orleans Parish is down 22% on showings per listing. It's really interesting data. I could geek out more on this and dig in, but I think this is a good overview of what our area is doing, coupled with the lack of affordability and the kind of overall value that people have in their homes. There's so many people owning their home outright. There's a lot of wealth in homes, and that's why more millionaires are created through real estate or having real estate as part of their portfolio than any other industry. And real estate is still the way to go, still a way to generate long-term wealth and net worth for you and your family and generations to come. So if you want more information on this, let us know. We're happy to dig in deeper for you. And if there's any other topics, as I mentioned, that you want to see or hear about, let us know. If you like this, give it a thumbs up and subscribe to the channel. We appreciate it. Thank you so much. Bye-bye.
My name is Blake DeBott. I'm with Magnolia Home and Auto. Living in the Gulf South means we must always be prepared for the possibility of a hurricane arriving with little warning. To ensure you're ready in case a storm heads our way, here are a few essential tasks to be handled beforehand. Number 1. Review your insurance policy. Double check that your policy is active and hasn't been canceled. Sometimes cancellation notices can get lost, leaving you without coverage. Confirm that your policy is in place and has been paid. Take the time to understand your coverages and deductibles, and don't hesitate to discuss any uncertainties with your agent. Number 2. Gather important documents. If you have flood or homeowner's insurance, make sure you have copies of the policy's declaration page. Be sure to take these documents with you if you have to evacuate. Number 3. Keep contact information handy. Obtain direct contact numbers for your insurance carrier so you can file a claim if necessary. During a storm, power outages may make it difficult to reach your agent, so having the carrier's contact information on hand will help you start the claims process promptly. Number 4. Document your belongings. Prior to a hurricane's arrival, take video and photos of your home and its contents. This documentation should include all interior furniture, electronics, clothing, and other valuables. Don't forget to capture the entire exterior of your home, including the roof's condition, as well as any detached structures. By completing these tasks in advance, you can better protect yourself and your property in case of a storm. Being prepared ensures a smoother claims process and gives you peace of mind during uncertain times. If you have any questions, don't hesitate to reach out via phone or email, and stay safe.